Hello and welcome to this video tutorial on why interest-only loans must be the loan type you have for all your loans, including your home loan, over having a principal and interest loan. I'm going to show you a real-life example that best illustrates this fact and all the advantages. So let's take a look. I've set this up here with an interest-only loan for this example of $500,000 versus a principal and interest loan of $500,000. Now what happens is, with principal and interest, let's assume in this example the monthly commitment is $3,330 per month versus the interest only person is a minimum commitment per month of $2,930. Now in this example, let's assume that the loan has been paid down to $430,000 over the years. Now with principal and interest, the bank have a requirement that this principal starts at $500, needs to drop over the years down to $440,000. Now in this case here, let's assume that it's been paid down to $430,000. That shows that there's $10,000 here, which is what's called available redraw, as extra payments have been paid. Now this $60,000 here is actually funds that the bank take as their principal reduction, as their bank requirement. Now the bank do this because they need that $60,000 to invest themselves or to lend out to other people after loans. However, what we'd like to do is educate our clientele to take out an interest-only loan. One of the hugest misconceptions in the marketplace is that an interest-only loan is not the same as a principal and interest loan. In fact, it absolutely is. With interest-only, anything that you pay above this $2,930 per calendar month is principal repayment. So what we recommend to all our clients is that they pay $3,330 per calendar month on their interest-only loan, and that will mean that their interest-only loan will operate exactly like a principal and interest loan. The huge difference is this: the person on the principal and interest loan will only have available cash redraw of $10,000. The bank here are taking away $60,000 that you can never ever get access to again. Why would you ever set your loans up so that you're giving the bank $60,000 of your hard-earned principal reductions when you can set yourself up with available cash redraw of $70,000 for doing absolutely nothing different to having a principal and interest loan set up? This is one thing that I like to educate people on. So take that a step further. Now with interest only, your minimum repayment actually drops as you pay more off your principal. So again, we're in the same situation here. Now your minimum repayments, if you're set up as interest only loan, would be $2,500 per calendar month. We do still recommend that you keep paying this so that your loan will operate and come down exactly the same way as principal and interest. However, things in life sometimes change. There are families that are having children go down to one wage. They have that choice to go down to that $2,500 per calendar month. If you're set up on principal and interest, you don't have that choice. Also, you get the reward of effort of cash flow relief, $830 per calendar month if you choose to do that. I had a client recently that I set up a few years ago on an interest-only loan, and he rang me up and said, "Steve, I'd like to go overseas for 3 years. Am I able to use this $70,000 to fund my 3-year vacation?" I said, "Absolutely." Now, if he was set up on this structure here with the principal and interest, there would have been no way he would have been able to travel for 3 years. He might have got 2 or 3 months out of this $10,000. So it gives you choices in life, and that's what it's all about. We want you to have this $70,000, not to give the banks the $60,000 to use. Another huge advantage of interest only, let's assume down the track you want to go and buy an investment property. The bank will ask one question: what are your minimum commitments to other loans? Now if you've got a minimum commitment of $2,930 per month versus someone on a principal and interest loan of $3,330, who do you think they will lend more money to? The answer is obvious. The person set up with interest only, with less of a commitment, is going to be able to get more money next time they go back to the bank. It's a massive advantage. Also, the person set up on interest only has got $70,000 that they can invest and go and buy an investment property for. This is a ready-made deposit to go and buy that investment property. This person here wanted to go and buy an investment property. On this structure, they've got $10,000 deposit. That is going to get them absolutely nothing in Australia. So this person here cannot buy an investment property because they're set up on a principal and interest loan structure. They would have to go back to their bank, restructure everything, more costs, whereas this person here has got their money ready to go. So take that on board, and I hope you learned something very valuable. Interest only is the way to go. If your loans are currently in principal and interest, get them changed straight away. If you need someone to do that for you, I would love to help you out. You can contact our office on 8602 6777. That phone number is 8602 6777. Or look up our website, Mortgage Choice, Latrobe Street, and we'll certainly help you out. Thank you.